To go over the answer to the Power Strategy 1 question on the previous page, let's take a look at the chart in question. So here's the chart. It's a Strategy 1 trade, so we know that the C to D leg is going to be agreeing with the trend. Can you find the trade? Pause the video and see if you can find the trade. Did you get it? Well, this is the trade right here. As I said, the C to D leg is going to be agreeing with the trend, which is down. We want to be trading in the direction of the trend. We know it's a Strategy 1 trade. So we know that we're going to be trading the C to D leg of the ABCD. Now, where are you going to enter? Well, you're going to be entering at the 25% mark, 25% of the A to B leg from point C, going down. So the 25% mark is approximately there. So when price comes to this region right here, you are going to be selling short. Where are you going to be placing your stop? Well, the stop is above the C point. So in all Strategy 1 trades, we are going to be placing the stop at the C point. For short trades, it's above the C point. For long trades, it's below the C point. What price would you wait for to move your stop to break even? Now you know that the break even point is at the 1-to-1 risk reward. So you look at the distance between the entry and the stop, and that many pips in profit is where you are going to move your stop to break even. So the 1-to-1 risk reward is here. Now the entry and the stop have been moved slightly in order for it to be a lot clearer for you to read the price on the vertical grid and make it a lot easier to work out the currency units, but the entry price is really going to be a little bit lower because of the 25% mark, and the distance between the entry and the stop and the distance between the entry and the break even is going to be an equal distance. So at the 1-to-1 risk reward, you're going to move your stop from the original place down to the entry price. Now, how many currency units would you trade here? Now we know this currency is US dollar against Japanese yen. We know that the entry is 92.62. Remember, with the Japanese yen pairs, we only take the 2 decimal places. With all other pairs, we take 4. And the stop is at 93.04. We know that we've got a $20,000 account in this example, and we know that we want to put on a 3% risk in the trade. So let's use the trade size calculator now. So the account size is 20,000. The risk per trade that we want to put is 3%. The currency is US dollar against Japanese yen. The entry price is 92.62. And the stop is 93.04. When we click calculate, we see that the amount of currency units that we should be trading is 132,314. So the amount of currency units we should be trading is 132,314. Now where would you exit? Well, of course, with a Strategy 1 trade, we want to be exiting at the D point. So we will buy back there because it's a short trade. We would sell first and then buy back. And so what would our risk reward be here? Well, we know with Strategy 1 trades, we enter at the 25% mark, we exit at the 100% mark. And when I'm referring to 25% and 100%, I'm talking about the A to B leg. So 100% of the A to B leg is projected from C to get the D point, and that's our exit, and the 25% mark is our entry. So if our risk is 25%, the stop to the entry is 25% because the stop is above point C, and our reward is 75%, which is 100% minus the 25%, our risk reward for Strategy 1 trades becomes 3-to-1. So I hope you got that right. Make sure you pause the video before I discuss the answer to each of the trading components, the entry, the stop, the exit, And make sure you work it out before I actually give the answer so you can double check that you've got it right. So let's move on to another example now. Go over to the next page and check out the next chart.